Assalamu alaikum wa rahmatullahi wa barakatuh. And this is the continuation of our program. And we are still on the control account. And this will be the last exercise we need to treat under the control account. And the control account, the reason why I choose this particular question is that it comprises all these method of setting question on control account. And the question, you have the following balance have been extracted from the book of Segun Limited. You have a January 1997 sales ledger balance, and you have a January 1997 purchase ledger balance 20,000. You have a total of the year 1997. You have purchase journal 200,000, sales journal, that's a purchase journal means credit purchase, and you have a credit sales, the same thing with the sales journal. You have 500,000. Check and a cash received from customer 290,000. Check paid to supplier. Check and cash paid to supplier. You have 150. Return outward journal. You have return inward journal. Discount allow. You have a discount allow and you have a discount receive. You have a discount receive, bad debt written off. You have a customer check dishonor, and you have a balance on sales. You have a balance on sales ledger set against balance of purchase ledger. That's a setup. You have a petty cash to supplier, and you have the balance in purchase account, and you have a petty cash to pay to supplier. You have a bill receivable and you have a bill payable. And after that one, and you have to prepare. You have to prepare. Before you have to prepare, you have a discount allowed, now disallow. You have a service charge added to unpaid account. And you have a credit note issue to customer. You have a balance at close. You have a both ledger balance and you have a sales ledger balance. You have to prepare the sales ledger and purchase ledger control account. And to move down to the solution, you roll the account. Here you have a debit and credit account, debit and credit side. The first account to prepare, if you like, you can first of all prepare creditor control account, or you first of all prepare total debtors control account. And the first account that I want to prepare now is a total debtors control account. You have a debit and you have a credit balance. Look at the question given to you. Under the question, you have this. Under the question given to you, and you have the figure, whereby you have the balance. Where you have the balance, you have a January 1997 sales ledger balance. And sales ledger balance will be opening balance, and if at all they said the January because it take first day of the month or first day of the year, and the opening balance must be on the debit side of the balance debtors control account. That's why you have a 12,000 on the debit side. And you now look up all this one. What are the items that will be on the debit side? What are the items that will be on the credit side? On the debit side of the sales purchase, on the debit side of the debtors or sales ledger control account, and you look for the credit sales. The credit sales must be on the debit side, while you have a check dishonor. And if you go through the question, you have the credit sales. If you go through the question, you have the credit, you have a credit sales, while you have a check dishonor. Check dishonor. Remember, you have check received from customer must be on the credit side of the debtors control account. Any dishonor must be on the debit side of the debtors control account. And what are the items that we follow again on the credit side? You have a return inward must be on the credit side, while you have a discount allow must be on the credit side, and you have a bad debt written off, must be on the credit side. And what of the set off, that is the purchase ledger balance set off against the sales ledger balance. That's what you call set off. The set off must be on credit side of this sales ledger control account, while you have a bill receivable and followed by credit note issued. If you have a debit note issue, must be on the debit side of the debtors ledger control account. Here you have a discount disallow. Remember, you have a discount allow on the credit side of the debtors control account, but if you are giving discount disallow, must be on the debit side of the debtors control account. You have a service charges, and after that one, remember I said credit note issue must be on the credit side of the debtors control account, while the debit note issue must be on the debit side of the control account. And you are given the closing balance where you have a balance at close. Here you have a sales ledger, you have a debit 255,454. You have a debit where you have a debit, you have a 255,454, and you have a credit again 50,000. Now, because we call it a closed balance, where this particular figure is supposed to act as a balance carried down. If you are given the closed balance and you have a DR, which is debit, you need to transfer it to the credit side of the debtors control account as the closed balance. And if you are given the CR, which is credit, you need to transfer it where it's supposed to act as a balance carried down on the debit side of the particular control account. That's why if you look at the sales ledger, you are given 255,454 under the DR, and you are given 50,000 under CR. That's why we take 255,000 to where it's supposed to act as a carry down, and take 50,000 naira to where it's supposed to act as a carry down on the debit side also. And if you now total your own account again, you discover that the both sides, both debit and credit, must balance automatically because you have been given the balance. But in a situation whereby you are giving only one aspect of a closed balance, if you are giving only one aspect of closed balance, that is the closed balance you are giving is the one with CR, therefore you transfer it to the debit side, and you now take your own calculator and total the both sides separately. By the time you total, you realize that the debit side must be greater than the credit side, and you now find the difference. That's what they call the self-balancing method. And you now find the difference, and the difference will now act as your own balance carried down on the credit side. Now, to close the account, once you have a carry down on the credit side, when you have a double line, immediately you close your account, you must have a balance brought down on the debit side, which is 255,454. On the credit side, you have a balance brought down also, you have a 50,000 naira. And to move down and prepare the purchase ledger control account, the first one, remember, you are given the opening balance, which is January. When you have a January in 1997, purchase ledger balance is 20,000. Remember, this is a creditors control. We have a purchase ledger or creditors control account. Remember, all credit account must have a credit balance. Therefore, the opening balance must be on the credit side. That is the balance brought down on the credit side of purchase ledger control account. You have a 20,000. All the items received by the supplier, like cash paid to supplier, 2,000 naira must be on the debit side, and check paid to supplier must be on the debit side. Return outward must be on the debit side, while you have a purchase journal or credit purchase, 200,000 must be on the credit side. And the next one, you have a discount receipt, you have a bill payable. Here you have a setup. If your setup appear on the sales ledger control account on the credit side, here the setup, the same amount must appear on the both account. 1,000 naira setup on the credit side of the sales ledger control account, and you have the same 1,000 naira must appear on the debit side of the purchase ledger control account as set off again, and you have a bill payable. You have a bill payable, and you are giving the close balance again. The balance at close, here your balance at close, you have a what? You have a bought ledger, 3,000 DR, and you have a 66,485 naira on the CR. Remember, this is the close balance. The moment they tag you with the close balance, you need to transfer them to where they are supposed to act as a balance carry down. That's why you have 3,000 under DR, you transfer it to the credit side and write the balance carry down. 66,485 naira, transfer it to the debit side and tag it with the balance carry down, and you close your account. Your account must balance. Remember, if you are giving only the DR, which is 3,000, and you transfer it to the credit side, therefore you are not giving the balance carry down on the debit side of this particular account. You need to take your calculator and find the difference between the both sides. Now, at the time you find the difference between that is, your account will not balance automatically, because you are not giving the balance carry down on the both side. You are giving balance carry down on the credit side only. Find the difference between the debit and credit. You realize that the credit side must be greater than the debit side, and the difference between the both sides will now act as a balance carry down on the debit side of the purchase ledger control account. To close your account after you roll the double, that is, draw the double line, and the balance carry down on the debit side, which is 66,485, must now act as a balance brought down, 66,485. 3,000 balance carry down on the credit side, you brought it down as a balance brought down on the debit side, 3,000 naira. And before you lay hand on this brief assignment, make sure you revise your notes very well. As you revise your notes, take note of all these terms before you prepare. And as you are preparing the different exercise, and you realize that you'll be able to master all the items that you used to appear on the purchase ledger account and the item that you used to appear on the sales ledger control account. And anytime you are given the question on control account, you'll be able to master them and you not commit or make this minor mistake. The exercise attached or assignment attached to this question is 17.2. That's page 210, essential textbook. I wish you best of luck, and Almighty Allah will give you wisdom and understanding so that you not forget all these brief lesson. I wish you best of luck. Subhana rabbika rabbil izzati amma yasifun.